Good morning, everyone. Happy Friday. So, yesterday was a little bit of a surprise. It was a big rush to get down to that major support area. I thought, after a gap of that size, you wouldn't get a range expansion bar that big. Historically, we haven't had this happen in a while, where you get three big red days. This has just got a big hole there, a big gap in the SPX there, where it gapped down and eventually it kept going down to this significant support level there. And you have to look at the day-to-day data. Kind of interesting that this put call ratio didn't flip back down again yesterday. We can take a look at that. Breadth is getting to where we want it to be. And I see the markets are up here a little bit pre-market. But ideally, I don't know, I think that 4,300 level, tagging that, maybe a little bit more of a scary moment. We'll see. Let's see, there's another level right there, another pivot right down here, give or take. We're 4250 something. We'll see. We'll see how this holds today, how much it may retrace into the red bar. And I won't even get into the gap, because I think any possibility of getting into that, filling that gap today is not going to happen. So anyway, you see what the problem, interest rates going up. You can see the cursor, you can see interest rates here. You can see the S&P 500 here. And you can just see, as interest rates rise, the market goes down. As interest rates come down, the market goes up. And then, flat, and then up and away, down, mini crash. And interest rates are stable this morning. So markets so far are stable. And, junk bonds went down, risk off where they would have gone. And it'll be interesting to see over the next couple of weeks, what they do. Could be one measure of where they might be that we can call a low point. If it's down here and down here, or whatever happens. So we'll see. Keep an eye on the inter-market relationships. Measure of the selling was what you would think it would be. Right? This thing closed at 2030 on the move down. So is it extreme? Yes. You may get a little bounce, which market's bouncing here a little bit, but it confirms what happened. So we do want to see that. Yield curves have not improved very much. Well, the 5 versus the 30 is almost going to turn positive. So maybe that's the start, but still below zero. You can see here. We'll keep an eye on those. They've been negative almost all year. Oil's taking a little break, as we can see. And gold just flip-flopping around, and the dollar continues to advance. It's a daily chart. We usually look at a weekly chart, but you can see a little bit of a turn there. So let's go to our other screen. All right. That was the big, getting the markets move, the big move up in interest rates. That's the 10-year. We did look at this yesterday, and I think when we turned it on the weekly chart or the monthly chart, we had to go to where the resistance was. It's got a ways to go before getting there. So we'll see if that continues to advance. Major support is down here. So a retracement all the way back down here would suggest it's not going to go up there. But so far, interest rates are just holding up there. Steady. Well, bearish, of course. The 10-year or the 30-year, it's the same thing. Gapped up, went up higher. We'll be keeping an eye on those. The 5-year, backing off a little bit. So markets, besides just being a little pushed to a lower extreme, getting some relief by some treasuries just not continuing to go up today. The dollar is kind of hanging up here. Let's take a look at what happened to the euro. Kind of holding steady, huh? Hanging there. We have a wide range bar ending. It is in this area. So watching this to see if this makes a turn. Pound still heading lower. And it broke through support. Interesting. All right. Sometimes they, after a decline like that, they break through and spring right back up again. But, we'll have to see if that actually happens. Canada rallying, ags have been going up, and let's see here, kind of a grinder, but they've been going up. That kind of helps them a bit. And commodities, with oil, been rising there. Okay, spiders. Down on major support. They're bouncing a bit here. Where are they in the lower third? So not a big deal. A little bit of a relief rally. I said not a big deal at all. Had this on a higher time frame. I wanted to go further back just to show this the swing back here in June, where it cut through these others and it went down there. Well, it was just above that at the open, as you can see, and it stabilized there intraday for a while, and then you can see the cursor on the 15-minute chart. And so I'll put it back there on the 15-minute, and you can see where it is on the daily chart. So, and you see that support there to the left, that pivot low. It was a little counter rally that got up into the area of those priors. And if they could have went sideways, I know I'd have been thinking, hey, can they go up? And eventually, nope. They just gave it up. And whoever was long buying on this little move down turned into selling and went down to the next level before it stopped. And we got another one down here at 425. I don't know if it'll get there. So, since it's down a bunch already from here, I think we looked at this before. So from the high point there, come on. High point there, down to where it is now. About a 6% correction so far. What would this be down here if it was to get down here? Oh, 7%, give or take. But we see a lot of stocks that have been down, that are down tremendously. So I always say that, look, markets having 3-5% corrections, 8% corrections, whatever, individual stocks can go down 50%. When we talk about the markets, that doesn't mean things aren't a heck of a lot worse under the hood. All right, so between here and here, there isn't much to stop it from going down. We'll just see how it plays out. And S&Ps, they didn't get down there to that level. It's kind of peaked under that one and began to stabilize. This S&Ps began to hold up. You can see whatever relief rally there is, it's insignificant. Where do I see the next resistance point? It's tickling. This thing is poking into that line right there. Well, on the futures, you just look to the left and you can see the next resistance point would be up here. As far as the S&Ps, minor resistance, there's a little cluster of overlapping bars right there. So a little bit higher. Talking the spiders, and they're here. That level would be here. You see these overlapping bars right there. And you can see the little consolidation where it was holding. And, over here, it was like, okay, can it go higher? Can it go higher? And it was like topping tail, topping tail. And remember, all of those topping tails were green bars that were near the high before that 5-minute time period closed. And I had mentioned in the green room at the time, like the 2-minute was going sideways, and one bar, I think, closed well, and then it came back down again, made a 180, and then everything just looked like it was going to start heading lower. And of course it did. So that's the resistance area right there. I'll scrunch this over a little bit. Put it in I. So somewhere right in here is where that would be. I don't know if there's any fib lines, trend lines, fib lines, VWAPs, whatever, volume histograms or whatever it is, but that's the price resistance area. All right. And so our SPX numbers did not get hit yesterday. Miracle, actually. Got damn close. So the ranges have opened up as you could imagine. And so you can see where they were on SPY, up a little bit. So average moves now, just based on what happened over the last few days, is 50 points. Who knows if it'll move 50 points today? Most times after a move like that, it's not going to move that much. It's going to hover around here. Some news might come out. I mean, keep an eye on interest rates and the dollar, because if they continue to move higher, then we could get some move down. And a 50 point, it would be, I don't know, I haven't seen that. That would be something to have such a move in 3 days. Wide range bar, a gap down, a wide range bar, and another wide range bar. Historically, so up above 43.90. He's got to get through yesterday's high. So I think that is, you got some lines of defense there, and the open gap. And, on the downside, it's beyond, the 50 points is beyond that. But I think it just won't move that much in one day, unless we just see the 10-year and the 30-year and the 5-year just ripping higher. Well, then that possibility starts to become, possible. We'll keep an eye on that. Other than that, I don't think either one of these numbers is going to get hit today. Qs held a little better, actually. They didn't come down to that pivot low. Where are they right now? Actually gapping up near the top of yesterday's range. So pretty decent gap. This is where they fell from yesterday. You can see those same topping tails. Support there. And yesterday's high will be resistance. And give or take. Pretty good gap. This is a 90-minute chart. I changed this to 90 minutes because I wanted to look further to the left on the S&P. So I just compressed it just to line that up. And it's got this void above. So you can see, even looking to the left of the void, there's nothing there because of the way that went up. Sometimes there's a big cluster of bars there. You can see the way that that shot up that day. There really isn't anything there. Oh, it's a 90-minute chart. Let's open it up a little bit. And pretty much the same story. There isn't a lot to stop it, but let's see what happens when it gets up there, how aggressive the sellers are. You can see the 15-minute chart, that double pivot high up there. And it's futures. They did come down close to the pivot. So 100% decline. And you think it's kind of, is it an extreme? Is it maybe exhausting itself? I wish it was gapping down, but it's not. So Dow, greater than 100% retracement. That doesn't mean it has to go down right now. Just means, the way we interpret it is that after 100% retracement, momentum will stall. And so far it's stalling. And nasty break. And we'll have to go. At least these contracts got messed up with this exchange with the continuous contracts, but look at that big head and shoulders top. There's just nothing to stop this from going down. I just repeat, it doesn't have to go down there, but it would have to create support. So until it does that, we have a bias that, yeah, it can go down there. And so we look at the ETFs and see that there's an open gap. And it doesn't have far to go to hit that open gap. So send an alert. I would imagine so. Alexa would go there, and that move down. So send an alert on your horizontal line or just the price to be aware when it goes there. It may hit that, go a little further. It's not, like a wall, but you want to know when it gets there and be down a whole bunch. So it would make sense for it to stabilize. And you can see the moving TBT backing off a little bit. So the market's like that. And the transports, surprised they didn't tag the 200. It'll probably happen. Let's just see percentage-wise how much that's down. And then let me hand it over to Dan. I was getting a little late. Just curious. Wow. 12.5% correction in the transport. So pretty good damage there. The airlines, as you know, they got clobbered. So, all right, that's it for me. Bitcoin's up a little bit. No big deal over there. Take it over, Dan.
What do you mean? That's it. You just started.
I just started.
Yeah. All right. Happy 0DTE day. As Greg said, we were, both hoping we'd get a big nasty gap and it would just make the snapback better for 0DTE and swing, because then the rubber band is cooked a lot more. But I still have a bullish 0DTE bias today, provided we hold. Now, Spider's 15-minute chart here, that's not as good. I just sent in Telegram. Qs are gapping here and going sideways, so 30-minute high or even 1 hour high would be better. Why? Well, because it's a bigger right shoulder at resistance. But I see the fangs are all up to different degrees. So yeah, 0 DTE bias. Apple here, gapping up to resistance. Had its party today, announcing their new iPhone. No, absolutely no. Well, there is a pattern on the daily, but it's short. If we get another inside bar or two, then on Tuesday, this is a continuation short. But for the day, that's different time frames. 30-minute high is a 0 GTE put spread. All right, I don't have any earnings, so I'll just kind of go through this list here. I just saw this thing going by the ticker. Look at this. This is a SPAC. I didn't go back and look. Oh, well, all I have to do is look at a 60-minute. Look at that. That's a real tail. I mean, look at this, folks. For this to be a tail, this thing retraced greater than 50% off the high intraday. I mean, just pity the fool who gets sucked in up here. For psychology, I told Greg we should, open a website called Top Tick. And the top tick of the day, you can go on there anonymously, and it would be, why did you buy it here? And I'd really like to know why you did that to learn trader psychology. Is it, I know, but there's different reasons. I mean, it could be short covering. It could be I was sitting at the bar with my buddy and he's sitting there high-fiving all of his gains and I couldn't take it anymore. But I just always thought that would be excellent website. Do it confidentially because nobody wants to admit that they're a friggin' fool to put behind. But I put this in a window. We'll see what develops. Gapping over yesterday's sign. Whoa, what's that popping here for? I know there's more, they're in the middle of this strike nonsense. The union president is trying to act all tough. Oh, we're going to expand our strike or at noon if you don't meet my demands. I would tell that boy, have you ever heard the initials FO? And some of you might be pilots in here like I am, but I am not referring to first officer. It's the other one. This FO. Are you kidding me? I think I heard that would bring their total pay package to like $150,000. FO. And no, there ain't no negotiations. FO. And Eskin here. Had some nice gap on some news. Gap's too big. We were scanning yesterday, believe it or not, for some put spread ideas. We started scanning the S&P 500 and NASDAQ 100 for the worst down. And when you scan like that, they're, most of them are kind of going to be in downtrends. But look at Intel had a big, we were talking about going 4 long right here on this breakout. We never did it. And this is, the problem we're going to have is of selling put spreads, not as much 0 TE as for next week. This is power down. And so, as we teach, if you're going to fade that for a swing trade, we need a potent reversal. That ain't a potent reversal yesterday. But 30-minute high, another put spread idea. Swing, recent IPO. Wow, is this a tail up here? Look, here's another tail. 1267. You gotta put that guy or girl to go onto that top tick website I talked about. But this is beautiful, beautiful 2-day, 15-minute chart. Look at that. Today's Friday, so Wednesday, out of the gate, bullish price action, out of the gate, negating. This is an example of something on its own page. This stock didn't care two hoots about what the broader market was doing or the Fed announcement. It's too extended now because now it's gapping up from 3 bars, but I'll watch it for a couple days. Look at this Futu gapping to the top of the range. I'm not going to do anything today, but if it can go sideways up here for a couple days, you got a void on the weekly. I'm sorry, daily. You got a buy setup on the weekly. Look at my 1, 2, 3 on the monthly. I think it's China, which I don't like, but if it sets up, this is a 4 long watch. Daily, weekly, monthly. I see a couple of these EV stocks gapping up today. So $40. 0 DTE. Put spread idea. So that it's in a trading range. It's under the 2050, but made a new low, a nice gap. Put spread idea. Milgo. Big gap here. Let's see what YouTube says. Some guy on YouTube didn't like my story of making fun of the high point bag holders. Well, you didn't understand my point very well. Yeah, I guess implicit. I am making fun of them because it's so contrary to our approach. But I made that comment more for the desire to learn the psychology, because many people have different methods of trading, right? Technical, fundamental, news, retracement, Fibonacci, whatever you want. So I'm just very curious about, okay, well, why'd you hit the buy button there? I'm curious. So that's all. So I think you misunderstood my point. All right, C-Web, gapping up 35.8. Wow, that's a big old gap. That is a big, big gap. So that there's still no pattern right here, but that's what we call a bull island reversal. So that, and look, you got a new low retest on the weekly. So ideally, we want that to come in a controlled manner for 2 to 3 days. And then we buy over a prior bar's high. So there's nothing to do with it now. We shorted some call spreads on these, so notice the relative weakness. They're not gapping up with the market. My low alarm just went off. So that obviously is a good sign for our call spreads. The REITs got killed yesterday. And that's why we were selling some call spreads on these. Set new low alarms here. All right, so AMT went off. Charlie India went off. Oh, that's okay. We actually did a put spread. So that's an early alarm. Nothing to do right now. Yeah, Alex, you know what? I was reading in the journal this morning. That you just have additional risk right now fooling around with military stocks just because of the budgets. Budget, haggling going on, and how much is going to go to them, and the drill. There's a total relationship between how much funding the sector gets of how well they're going to do. Obvious reason. You're plowing money into their merchandise. Surely India. I got a new alarm. Just like with Ford, we actually traded Ford 1, 2, 3 right here. We bought long calls. So I'm not adverse to trading something in the news. You just got to be aware that there's some gap risk there. Particularly if there's a deadline coming, like this labor thing. I think the union guy gave him a deadline of noon. All right, we have long puts on Zulu India and IPG. Let me see where our stop is. All right, our stop is 1612 on this one. So we'll just let it play out. IPG, our stop 29.94. So we can lower this now. 29. How about 29.72?